Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Rick Ackerman, editor of the newsletter Rick's Picks, his website rickackerman.com. Welcome back to the show, Rick.
Thanks for inviting me on, Jim. A pleasure always.
Rick, you would think an unsettled presidential election in the U.S. would have a major effect on the stock market. Has it?
So true. You know, for a while there, they were feeding us the story that, the market's okay with Biden. Trust me, they're not okay with Biden. You know, just doing away with the Trump tax cuts, and you're going to see who's not okay with it. But nothing has changed, really. It was pretty much established that if Biden won, you'd see the most anti-business administration in the history of humanity, other than during the the central planning under Stalin. So it's just a cover story for distribution, really, that the market can live with Biden. I'm going to tell you that it can't, and it won't.
What do you think the effect will be?
Well, as they re-regulate everything and tax the quote-unquote rich and raise the corporate taxes, the result will be the stocks will fall.
And what kind of a fallout is that going to have for the U.S. economy, which has already been pounded?
Well, we really can't afford a bear market. That's been the Fed's main theme, really. No matter what they say, they're really just trying to pump asset prices. And once you get on the down slope of that, it's like trying to you pick up a set of weights and you hoist 500 pounds over your head. Of course, if you've had a lot of practice, and if you can't quite get it up there, or once it starts coming down again, you never find the energy really to push your arms into a locked position. So once we start to feel the tug of deflation, and it could come organically, really, just because a falling dollar is going to force interest rates higher. That's the one other thing we can't afford, is even slightly higher interest rates, because it would subject not just all that government owes and that we owe as individuals, but it would ratchet up the interest rate on $250 billion worth of derivatives. They're all leveraged vehicles that are predicated on free money, more or less. And if you subject the whole shoddy edifice to slightly higher real rates, we're going to be on that downslope of deflation.
Do you think higher interest rates are inevitable and they're going to happen soon?
No, I don't. I would say higher real rates are inevitable, because when you get rates down zero, that's just a simple fact. So it's hard to predict what the inflation rate will be. And of course, I've been an ardent deflationist for years. One thing that we should have discovered, but it seems like the lesson wasn't learned in the great crash of 2007 and 8, was that a 3% mortgage can become pretty cumbersome. Even a 2% or a 1% mortgage can be quite a burden if the value of the underlying asset, namely your home, is decreasing in value by 10% a year, as was the case back then. So it's the real rate that matters. And of course, when you get asset inflation across the board, and so much of the bull twaddle money out there is tied to very flimsy collateral, you're going to see a hell of a real interest rate. It's going to be crushing, and that's what deflation's all about.
Now, I just saw a story that said the average Canadian family will be paying $700 more for food next year. Does that mean we're going to see a drop in food production, or are they just going to charge us more for essentials?
Well, I think the farmers are in good shape here. I guess there was a lesson even in the Weimar hyperinflation. It was said, this is something that Adam Ferguson wrote about, that if you borrowed 100% just to buy arable land, to buy farmland, you could have paid 100% of your loan, paid the entire loan off with the proceeds from your first potato harvest. So in that pyramid of relative values, things, what's most important really is productive land is right up there. So anyway, I guess even when I go to the grocery store, I'm sort of hoping that some of these ridiculously higher prices that we're seeing, at least some of it's going to the farmers.
If there's food inflation, how can other things deflate? How does that work?
Well, food is nothing. When I used to make the case for deflation, or I've been doing it, as I said, for decades, and people would say, "Are you kidding? Have you been to the grocery store?" Well, I call that lettuce bin inflation. And, for the price of celery to go up by 30 cents a stalk, or the price of everything you buy in a grocery store to go up by 30%, that's nothing. That's absolutely nothing compared to the deflationary force of a $2.5 trillion derivatives market. So whenever I talk about deflation, it doesn't really relate to this argument, oh, well, if you try to put your kid through college or whatever. Those are all incidental. And I used to say that inflation is deflationary to the extent, and this is still true, to the extent that we have inflation, but every penny of it is really leveraged out of debt. And, one of the reasons that this craziness cannot continue to go on, cannot go on forever is simply, something, I guess it falls under the heading of the productivity of debt. And there were some interesting figures from Lacey Hunt. He was with Hoisington Investment Management. And let me just quote him here. Each additional dollar of debt in 1980 generated a rise in GDP of 60 cents, up from 54 cents in 1940. And 1980s was the last decade for the productivity of debt to rise. Since this ratio has dropped sharply from 42 cents in 1989 to 27 cents in 2019. Now, if you missed the point here, it is, to state it another way, it's taking roughly $3.70 of borrowing to create $1 worth of economic growth at the margin. And of course, that ratio is continuing to worsen. So you have to ask yourself, how long can that go on? We're really borrowing an enormity right now, just to squeak out what you would call marginal growth. And even the measurements of growth are all cockamamie because, we've got, some companies that contribute nothing to anybody, not productivity, just worthless companies, big advertising firms like Google and Facebook, and they all count as GDP, but it's worthless GDP. You really need capital intensive things, companies that actually make things to have real productivity. So we're just sort of fooling ourselves now with all this phony wealth.
We'll have more with Rick Ackerman right after this.
Value from success. Growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Rick Ackerman. Rick, before we went to air, you were mentioning American corporations are sitting on enormous piles of cash while at the same time owing enormous amounts of money. What's the story there?
Yeah, it's really funny. Only the House organ like the Wall Street Journal could ask the question, what are they going to do with it all? It's like saying you go out and buy a house and you're in hock to 200% of anything you might own that you might make in your lifetime, and where are you going to go out and spend the money when you refinance it? So all these companies are flush with cash. Corporate cash, so-called excesses, are at a record. I think it's somewhere near $2 trillion, but there's a corresponding offset with debt, which doesn't seem to matter when the Wall Street Journal is posing this ridiculous question, what are the companies going to do with their money? The answer is nothing. There's nothing they can do because there's nothing out there in the world of investments that's worth anything, that's let's say good value. And yeah, they could throw it all at Bitcoin like all the other speculators. But in reality, there's nothing you can put your money into right now. Nothing productive, and that's why we have so many huge companies that produce nothing, like Google and Facebook. Anyway, it's going to be a challenge, and it's pretty predictable that when you're sitting on $2 trillion that's offset by $2 trillion of borrowing, and there's zero you can do with it, there's no good investment, well, eventually the money has to fall into a sinkhole, and by sinkhole I mean deflation. So whatever they're sitting on right now, and whatever expectations investors have that these companies are going to support their own stocks are so bloated already that support is not really going to count for much economically in the long run.
Is the U.S. dollar's position right now affecting these piles of cash and debt? Well,
yes. I mean, yes and no. The no is it's a bad thing. It is that it doesn't matter really if you're sitting in dollars. You're at least not getting negative interest rates. At least not in theory. In real terms, you are. But in any case, the dollar is kind of the big enchilada, but it hasn't been destabilized to the point where it has precipitated out as deflation. Deflation would essentially mean a very strong dollar, but I've always felt that the dollar would strengthen just for reasons that all the short-term borrowing that's been done would become unrollable. There's so many trillions of dollars that roll over that are rolled, trillions of dollars of loans. A lot of them are, they have overnight time frames, and at some point, all those loans are not going to roll. The lenders are going to say, "Hey, we want cash," and when borrowers have to settle up in cash, that's going to put a short squeeze on the dollar. And there are a few people who have picked up on that theme since I first wrote about it, maybe 30 years ago, but I think it's still out there.
If there's this $2 trillion pile of corporate cash, why are corporations, airlines, cruise lines asking for government handouts right now? Why can't they go to the private sector?
Well, I hate to say it, the obvious answer is because they can. And it's the same on the borrowing side. Why are these companies that have billions and billions, in some cases tens of billions of dollars, borrowing money? And the answer is, well, why not? If you can borrow it for just about nothing, you put yourself in a better cash position. And some of the bigger corporate borrowers right now, AT&T is near the top of the list, and Delta Airlines is another. And I guess the excuse is, well, we're just sort of socking it away against the worst possible case with COVID. But, I sometimes tend to see the glass is half full, but of hemlock. And in this case, we're all sort of so psyched up about, hey, we finally got a vaccine. But I think that, the bad things come in threes or sometimes fours or fives or sixes or sevens. And we've had a couple things with the COVID and even the rioting and looting over the summer. And we're thinking, well, maybe we're going to clear the air here, but it would be the perfect storm or the perfect time for something else to come out of nowhere. And I think that something else would be a bear market in stocks, because that would make I hesitate to say that anything would make the economic effects of COVID look like a picnic. But when a bear market finally gets rolling, which there's no instance in recorded history of market history where that didn't happen, it's going to impact the economy much more than the pandemic has.
Well, we've seen so many small and medium-sized companies go under already, and as you said, no sign of a stimulus package for them yet. What's going to happen when the generator of the majority of jobs in the U.S. no longer exists? Over 70% of jobs come from small business. That's
true. And of course, that's nowhere in the thinking of investors or Wall Street or the front page of the Wall Street Journal. They're all sort of rah-rahing Google and Facebook and all the worthless garbage companies that have sucked up all the world's capital. I almost put Apple in there, great. They make a cell phone and they change the design and they put more cameras on it every year. But, or they upgrade the photographic optics. So big deal. So it's a question. It's really just, as you say, the small businesses are really the engine of the economy, and, they've already been hammered so badly, but now you can see with the, increased lockdown in California and elsewhere that the ones that survived are not going to survive for that much longer. And of course, when you talk about a restaurant, it's from an economic standpoint, it's not just a place you eat. It's a place that has, 30, 40, 50, 60 employees. They all pay rent. So you've got landlords. There's a whole sort of stream of things that flow from a restaurant payroll and a restaurant's, inventory needs and things like that. So all these small businesses do have consequences, for what's ahead, but we're so focused on, the rah-rah super duper stock market rally that's essentially, a half a dozen stocks that are mostly worthless to the economy just going bananas. So as far as the latest stimulus package, I think there's a good piece in it for workers. And Hawley, Missouri senator, made the point that he's told Trump not to sign this $900 billion package unless the lion's share of the money goes right to the people who need it. Because we saw, in the last stimulus package, a lot of country clubs got money, a lot of lawyers got money for their law firms and things like that. They were in a very good position to do the paperwork, I guess. And but the stimulus is only going to keep us alive for so long, and you can see it's not a winning game if you have to keep doing a $1 trillion stimulus package every 6 to 12 months.
Well, when you talk about how to apply for it, Grimes, the girlfriend of Elon Musk, the second richest man on the planet, got a $90,000 Canadian government loan for her arts company. And I'm just going, really? And I guess they just have the right people who know how to apply for government slush funds.
Yeah. and there, you say, well, why do they do it? Because it's there. I guess it was, I can't remember, one of the agencies hounded me to borrow money, and my business has been pretty good. I'm all online, everything's fine, and but a lot of my subscribers said, no, you got to apply for this money. You can get up to whatever it was, $10,000, no strings, and you don't have to pay it back and all that. And at one point I thought, well, I don't really need the money. So I didn't do anything, but the agency that was making the loans or taking the applications came after me, and they said, well, you really should do this. And I thought, well, I'll fill out the paperwork anyway. And then, like all things government, they lost track of me, or I couldn't even, they changed their phone number. It's like the IRS changing its phone number. And so I lost track of where the application was, who had it, what part of the process. And occasionally I'd get an email that said, you still have, even if you don't claim the 10 grand, there's $1,000 for you just for, I don't know what it was, just for your good faith, your efforts. So I just, but whenever you get a phone number to call, you can forget it. You'll never reach anybody. So anyway, I guess you could say I saved the taxpayers $1,000. Well, not the taxpayers anymore. That's the problem. We're not saving. Nobody really thinks that the taxpayers are going to pay back what's been borrowed to quote unquote stimulate us out of this pandemic. It's all sort of wink wink like the student loans. And if the idea behind the stimulus is to stimulate to the point where the economy can stand on its own, that's even stupider than some of the stuff that Greenspan used to say, because all of the stimulus is just, in theory, debt, and if we're really going to pay it back, then the burden of debt will make any growth at all impossible, let alone sufficient growth for everybody to live well, pay the interest on their loans, and eventually pay off the principal. So the whole idea of stimulus is a fraud at that level. The stupid, mendacious notion that if we stimulate for long enough, the economy will grow itself out of the problem. But the stimulus itself is increasing the problem, which is debt, by an enormity.
We'll have more with Rick Ackerman right after this.
Ackerman Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Ackerman's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at ackermanresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Rick Ackerman. Rick, after a huge burst upwards, gold has fallen back a bit. Is it going to pick up again?
I don't know. I guess I kind of like gold here short term, but you know that every time it really gets rolling, it disappoints. It gets up to a certain threshold, and then it just kind of comes down, and all the big boys, the bullion bankers and everybody who plays gold from the short side, they borrow it for nothing and essentially arbitrage it against something. The carry trade is another term for that. But so gold gets brutalized opportunistically whenever the news turns slightly against it. But it's noticeably still in a bull market. I mean, the bad guys can beat the crap out of it on any given day. But if you look at a long-term chart, you'll see that they haven't really accomplished much. So gold is sort of, I think, marking time, waiting for a real crisis to arrive, and then it's going to show you a thing or two. It's also going to even the score with Bitcoin. You know, I have subscribers of my own who are immersed in the Bitcoin world, and a lot of them, and this is incredible. They say, you know, they'd rather hold Bitcoin than gold, but trust me, gold is going to win that race. It'll come out ahead in the end.
We talked about Bitcoin briefly. What's the story behind it? You said nobody or people don't have a place where they want to put money to invest, so they're going into Bitcoin. How risky is that?
I think Bitcoin is an enormous hoax. I don't mean to say that the blockchain technology is a hoax. The encryption technology that makes Bitcoin possible is infinitely useful. In fact, it could have saved the day for the election, if we tracked votes using blockchain encryption. So the technology is good, but what's the point in pretending that, you got all the big guys like Saylor, Paul Tudor Jones, they're saying, they're in Bitcoin all the way. All they're doing is talking their book, because there's no real way that Bitcoin can at some point substitute for, just to take one thing, the $2.5 trillion derivatives market. So all these guys saying, oh, Bitcoin's going to grow from 200 billion to 10 trillion, they're full of it. And you need to acknowledge also that the so-called transaction value of Bitcoin has not even been realized, because in Bitcoin version 1.0, they couldn't get the transaction cost down low enough to make Bitcoin the transaction medium for small stuff like your Starbucks coffee. So Bitcoin, absent its transactional usage, it's really just a pure speculation vehicle. And I love it there. When I look at it on the charts, I got no problem. You got to own it. You just do. It's been the strongest performer since the March 23rd stock market low. Bitcoin is sort of it's outperformed everything. But you shouldn't mistake it for anything but what it is, which is speculative mania. And I have not yet, in a Bitcoin world and in the 6 or 7 million words that I've read on the subject of Bitcoin from some of the world's great experts, I haven't seen a single sentence that would lead me to believe that Bitcoin has any intrinsic value. It could conceively be valuable in transactions if they get some of those things ironed out that I mentioned earlier. But where does Bitcoin get its value? I mean, if you had a good, you've got a pretty good name out there in the media world, Jim, and if you were to start your own cryptocurrency and brand it as Jim Goddard Crypto, you might have enough following to have it circulate and to have your Jim Goddard money have value. But from what? The only thing I can see that the argument is always, well, it's scarce. So what? The original Bitcoin is limited to X amount of I think, what is it, 22 million Bitcoin, and something like that. So it's finite, but a couple of things. It takes more and more energy resources to produce that Bitcoin. Most of the people who try to solve the algorithm to get Bitcoin as a reward, they fail. There's only one winner. So all of them have expended enormous energy coming up with a losing gain. And so Bitcoin is enormously wasteful of energy. And so anyway, on the one hand, I see Bitcoin as just a giant hoax. But I love it as a speculative vehicle right now.
Does it remind you of tulip mania from the 1630s when people were making and losing fortunes in tulips?
No, because the tulips were beautiful and I guess prized for their beauty. You could say as much about gold, really, if you compare gold to Bitcoin. But I think they're different. The Bitcoin has the ability to be to generate a lot more speculative craziness than tulipomania did, because again, with the tulipomania, it went back to rare bulbs. There were actual things, physical things that existed. I don't think they got to the point of futures contracts on tulips. But Bitcoin, not so. It's digital and it's infinitely expandable. And, there are going to be so many different types of Bitcoin to accomplish, certainly not anything in the transaction world, but to accomplish to meet the speculative needs of the Bitcoin crazed. So I don't think it's going to end well. There was something, I think, someone made a very blunt statement, someone in Brussels about, or someone in the European theater said, well, the government's just not going to, go for decentralized money. They're either going to co-opt it or they're going to, eliminate it. So that's a big problem too. And for anybody who's speculating on Bitcoin being easy to hide, you can't, that's completely stupid. It goes so counter to what we know of government's desire to unhide sources of revenue. So I can't really see what the end value of Bitcoin is, even though you got some of these mockers in the financial world, like Paul Tudor Jones and Raoul Pal is another, and Saylor. They're all, as I said, talking their book.
A lot of companies right now aren't accepting cash, saying it's for sanitary reasons. Is this falling into the hands of the government that doesn't want to see cash exist anymore so they can track every transaction you make and tax every transaction?
I guess I have mixed feelings about that. I suppose the government would like to track every transaction, and the paper trail just with credit cards is sufficient to do that. It places a little bit of a burden on the IRS auditor simply because they have to infer income from your lifestyle. But we're pretty digital now just with credit cards, and nobody's much using any money. They've upgraded the credit card technology now, so you don't have to swipe. All you have to do is tap, and so it's all pretty clean. And for the time being, I guess it's working. We're certainly not in a money crisis right now, but as I said, I'm skeptical that Bitcoin will be much of a competitor to gold, even though it might give currency a run for the money.
Rick, thank you so much for chatting with us.
Always a pleasure, Jim. I appreciate your inviting me on.
My guest has been Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. If you have any questions for Rick or any of our other guests, you can send them to info@housestreet.com, our YouTube channel, Talk Digital Network. Find us on Twitter @HoweStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of HoweStreet Media Incorporated.